What do you mean by money as a tool? And how is that different from how everyone else thinks about money?
You have to understand how money plays a part in your life. When I say money as a tool, what I mean by that is money doesn't make you a good person. Money doesn't make you a bad person. It amplifies who you are. And what I like to say is that there are 4 fitnesses in your life if you want to live a happy and fulfilled life. You have to be physically fit, mentally fit, spiritually fit, and financially fit. If you're physically fit, you're on your deathbed, you're morbidly obese, having $10 million is not going to make you happy. All you want to do is be healthy again. Mentally fit is about being happy. If you're surrounded by toxic people, if you're unhappy, if you're depressed, if you're anxious, if you're just miserable, you're never going to be able to really enjoy life. Having more money is not going to fulfill that hole. Spiritually fit does not mean religious. It means having a purpose. What is the reason for getting out of bed every day? What is the reason for wanting to go out and achieve and do something? Because if you have $10 million, what's the reason for wanting to get up and conquer? At the very top is financial fitness. And once you have the bottom 3, having financial fitness gives you the most power and ability to live the best life possible. Because this is all about now being able to solve your financial problems, being able to not worry about paying your bills, being able to have the nicer stuff when you want and not have to worry about the price. And the thing about this that I want to really hammer home is if you don't have this financial fitness, now your physical fitness can get hurt because you can't afford the nice gym membership. You can't afford the healthy food. You can't afford to take care of your body. If you don't have the financial fitness, your mental fitness can get hurt. Financial problems are one of the leading causes of suicide and divorce. Financial problems can really stress you out, and they can cause a whole lot of anxiety and depression. Financial problems can also ruin your spiritual fitness, because if you can't pay your bills, you can easily lose your sense of purpose. So yes, being financially fit is its own part, but it all comes together in your life.
Number 3 to this money mindset.
Money is abundant. And what I mean by that is you have to be willing to think bigger. Because oftentimes what happens is we start to think about the dollars that I'm giving as opposed to the dollars that I'm getting. If I pay you $1, you are getting rich off of me. But I'm not looking at what I'm getting. If I'm getting $2 from you, well, is it bad that I pay you $1? No. And this is where now we need to start to understand there's a lot of money in the world. Just because somebody gets rich, that doesn't mean somebody else can't get rich. And the reason why we get this confused is because we assume that money is scarce. And this comes from our childhood. Because when you grow up, you're fighting for your parents' attention. And there's a limited attention span that your parents have. If you have siblings, now it's divided. And so you can't have all the attention. So if they're giving your parents are giving their attention to somebody else, that means you're not getting attention. It's a yes or no. It's a black and white. But with money, that's not the case. You can be rich and I can be rich. But we have to understand that there's a lot of money in the world. I mean, the United States government has $35 trillion of debt. It's a lot of money. And so if you just take a small piece of that, a small piece of the dollars out there, you can build wealth and somebody else can build wealth.
And why is that particular point in this money mindset so critical? Why is it important to know that there's so much money out there? How does that change you?
So if you make $50,000 a year right now, what you might start doing if you become financially smart is you might say, all right, I'm going to start living off of 75% of what I make, and I'm going to invest the other 15%. That means I'm going to live off of $30,000 and save and invest, we'll call it $20,000. You might now say, I like this idea of investing. I'm seeing the potential. What do? I make $50,000 a year. How about I keep cutting back? Now I'm going to live off of $25,000, $23,000. There's a limited number of dollars that you can squeeze out of this pie. But there's no limit to how much you can earn. So what if I say, let's flip it up a little bit? how about instead of trying to squeeze more pennies out of this $50,000 that you have, let's try to earn $500,000 a year now. And the first thing that's going to happen is you're going to say, whoa, $500,000 a year? My boss is not going to give me a $500,000 a year salary. What are you talking about, Jaspreet? Well, okay, let's break this down. If you want to make more money, how do you do it? I don't know. Well, let's start learning. Where are you going to go to learn? I don't know, Google, YouTube? Okay, let's go to Google and YouTube. How can I make more money? Maybe you start by learning how to ask for a raise. Maybe you learn to get a career change. Maybe you learn to change jobs. Or maybe now you start to think a little bit different and you say, maybe you start to build a side business or a side hustle. That way you can start earning more money. But until you realize that it's possible to, instead of trying to go from 50,000 to 55,000 to 58,000 to 65,000, let's try to go a little bit bigger. How about 50,000 to 500,000? And that's going to require, number one, you break out of that mindset shift, that invisible barrier, but also understanding there's a lot of money out there.
And the last point here is I will become wealthy, which is different to the first point, which is it's my duty to become wealthy.
So we discussed the first one, which is I will become wealthy. The last one is it is my duty to become wealthy.
Oh, okay. Why is it your duty to become wealthy?
Because I believe that it's up to you to take care of your family, to be the one that takes care of yourself, that we can also help take care of your community. That is my belief, that it is your duty to do so. And if you rely on the government or somebody else to do it, well, you are asking for problems. And, we've seen this in many instances where you might have heard in the United States, Social Security is drying up. It's never going to dry up because the government can just print more money and pay it out. But it's never going to be enough to live a great life. People that relied on pensions, well, pensions are becoming a thing of the past. Some pensions have gone bankrupt and people have lost that. So it is more important than ever for you to become financially sufficient and financially stable through your own financial education.
Trump has just been elected the new president of the United States of America. And when you saw that news, did it change your thesis as it relates to wealth creation? Is there anything you're now going to be doing differently? Is there any new opportunities that you now see? Are you shifting your capital allocation towards more risky assets or less risky assets or real estate?
If we take a look at the last 15 presidents in the United States, some have been Democrat, some have been Republican. The stock market has gone up under Democratic presidents. It's also fallen under Democratic presidents. The stock market has gone up under Republican presidents. It's also fallen under Republican presidents. So, what does that mean? Well, if you were just investing for the long term, who cares? But for some investors that we'll call it a little bit more sophisticated, if you're enjoying this video and want to take your investing to the next level, I want to remind you that I put together a free investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. It's a completely free masterclass, and when you register, you'll also get access to Market Briefs, which is my newsletter for investors, completely free, complimentary as a bonus. So if you want to get the investing masterclass and Market Briefs all for free, all you have to do is click the link down in the description below to get it. You might want to understand what the president is going to do in terms of shifting government spending. Now, I'm going to make this a little bit technical, but let me kind of break this down. Our economy is measured through a number called GDP. And GDP is a measure of all spending that happens in our economy. In the United States, the largest spender is the government. 30% of our GDP, our economy, is government spending. Which means that there are certain entities, certain businesses that will benefit depending on where the government spends money. And that can then impact those stocks, it can impact those industries, and it can impact those businesses. So now, let's break this down. If you're a long-term investor, you're investing in the S&P 500, you're investing in just general ETFs and index funds and mutual funds, it does not matter. But if you are, let's say, a little bit more sophisticated, you want to understand now government shifts that are happening, now we can dig a little bit deeper. So prior to the election, we published a whole report in Market Briefs Pro on this, where what we talked about is if Trump is elected president, here are the things that he has said that he's going to do. Number one, he wants to deregulate oil and gas. Number 2, he wants to deregulate the financial service industry. And number 3, he wants to invest in the military. So if you break this down, oil and gas, these are companies that are investing and drilling oil. And so if these companies have less regulations and more ability to produce product and sell more product, they could see bigger revenues and bigger profits. Number 2, with financial service industries, things like the companies on Wall Street, if you deregulate them and give them the ability to do more things, they can make bigger revenues and bigger profits.
And crypto as well.
And crypto.
Crypto's, since the news that he's going to be inaugurated, the prices have just skyrocketed.
Exactly. And number 3 is investing in the military. Now, what does it mean to invest in the military? Well, if you're investing in the military, that means that we're going to be practicing shooting more guns, shooting more bullets, having artillery, having planes and other machinery. And these are then done by private companies. And so if the government can spend and choose where to spend money, and the government then decides that they want to spend more money or allow companies to be more free to do whatever they want in these industries, those industries then have the ability to potentially grow their revenues, grow their profits, grow the stock prices. These can then create what we call a government shift because the government spending shifts, and that can create an investment opportunity for investors that want to be a little bit more sophisticated. But I'm going to say this again. As a long-term investor, forget the election cycles. You're investing for the long term.
For those less sophisticated investors, as you were when you were 19 years old, you chose to invest in real estate as a cash-generating asset. Now, if I want to invest in real estate as my first investment, as you did, what are the things that I should be looking out for if I'm someone that knows nothing about real estate? What kind of properties should I be looking for? How big? Does it matter how much those properties cost? Am I looking for family rentals, studio apartments? What kind of things matter?
What you invest in is going to depend on what's best for you. But the way I like to look at it, for me, because I can't tell you what to do, is for me, when I invest in real estate, is I look for a 7% cash-on-cash return minimum.
What does that mean?
So if I invest it $1 today, I want 7 cents of cash flow after expenses every year for my dollar that I invest. So if I buy, let's just call it a $100,000 house, and I'm going to keep it very simple. We're going to have no debt. I take $100,000 out of my bank account and I buy this $100,000 house that I then rent out. That rent, after all the expenses, should then put at least $7,000 into my pocket every year. That's what a 7% cash on cash return means. Now, for me, I prefer single family houses or multifamily apartments because that's kind of where I got started and I've found more success there. And it's a little bit more innovation proof because we know that offices can go up and down. If companies are working from home, offices can be affected. The retail sector can be impacted if companies are moving online, and we see that there's a lot of shifts happening in the retail spaces. But at the end of the day, you got to find what's right for you and how involved do you want to be. When I invest in real estate, I want it to be passive for me. That after I find a property, after we do the renovations, I want to give the keys over to a property manager. I don't want to have to worry about it.
Okay, so you don't become the landlord yourself and deal with the tenants directly?
I do not. And the reason why is I have other things that I need to do. And I don't want to spend my time managing the property. I want to spend my time acquiring. I want to spend my time investing, but I don't want to spend my time managing.
What's the best investment you ever made?
The best investment I ever made is the investment in myself. That has given me a much better return than any real estate, than any stock, and even than any cryptocurrency. And when I say best investment in myself is two things. Number one is the investment that I have made in my own education outside of school. So books, podcasts, classes, coaching. Number two, the failures. I have made a lot of mistakes. They have cost me a lot of stress, a lot of headache, a lot of money, but they have taught me a ton. So we'll talk about real estate for a second. If we go back to the first condo, The sunshine and rainbows is I rent this property up for $600 a month. But the downfall, or the risky part and the bad part, is that I made every mistake possible. Number one, I hired a bad contractor. Number two, I hired a property manager, which I didn't realize was a fake property manager. We didn't even sign a lease with the tenant. I didn't even sign a contract with the property manager. They weren't working with the tenants, and they gave the tenant my phone number. So here I am sitting in my organic chemistry class, getting calls from my tenant saying the property is going to implode because the light bulb fused. Then we brought in a bad tenant.
Can I ask you a question there?
Yeah.
Then? How could you have avoided all of this?
Well, I could have either, number one, had a real estate investor that I could have talked to, which I didn't have access to. I read a lot of real estate books. So if we say, what could I have done differently? Probably
to avoid
nothing.
it. Because there's people listening right now that are going, Jesus, I want to get into this real estate game, but I don't want to go through all those
You can
mistakes.
learn as much as you want. You're going to make mistakes. It is a part of the process. You can learn everything you want, but every real estate deal is unique. You are going to screw up. And I have made a lot of screw ups. But once you get through the screw ups, it becomes a lot easier. I call it the hurdle. But then things get even more exciting because now I bring on a new property manager and the tenants move out. And then we think everything is good. And now I get a letter delivered to me, hand delivered. Well, this is a nice gift. It says, Jaspreet Singh, you are being sued. And I said, what? Those tenants then sued me because they claimed that the bathtub was too slippery when the water was on. True story. And now here I have this lawsuit. I'm 21, 22. I have no idea what's going on.
Jaspreet, was the bathtub too slippery?
Well, I'll tell you exactly what happened. There was a chip about the size of a quarter in the bathtub. The paint had chipped. They filed a complaint with my new property manager. Thank God I switched property managers because what a good property manager does is they're going to document everything that happens. So my property manager documents that, okay, tenant complains of a chip in their bathtub. We send out the contractor. So the property manager sends out the contractor. They go there to fix the chip in the bathtub. And you know what the tenant says? Can you come back a different time? My husband slipped and fell at a friend's barbecue, and so we don't want you to fix that chip today. The contractor says, okay, we note this down. He tries to then fix the chip 3 more times, but the tenant denies it every single time. And so we thought, okay, just let us know when you want the chip fixed. The contractor is waiting. They never brought it up again. Then we get this lawsuit saying that we were negligent, that I'm this evil, greedy human being because I refused to fix this chip in the bathtub, which made the bathtub slippery when the water was on, which caused this person to slip and fall and break their hip. And so now we go through the lawsuit process. Thankfully, I had insurance, but the insurance company still has to pay for the attorney. I still have to be involved through all the proceedings. And now they're claiming that because I didn't fix this chip, it made the bathtub slippery, and that's what caused this tenant to get hurt. But we had the documentation saying that they slipped and fell at a friend's barbecue. And then we go through the hospital records, and we found out that this person slipped and fell at a barbecue. But they wanted to get some money out of this rich landlord. I'm a 22-year-old kid, a 21-year-old kid. I have no idea what's going on. And so the insurance company had to settle. They paid $14,000 to make the case go away.